All right, everyone, welcome back or welcome in. In this video, we're going to be discussing HEX and how it's been showing strength in what many would consider to be a bear market, but we ask ourselves, what bear market? Because just look at this price action. Absolutely unreal compared to the rest of crypto, and we're going to be covering that in this video. So remember to help us reach 2,900 subscribers. We are close. We're definitely close, so help us get there by smashing the sub button. And with that said, let's go ahead and talk a little bit about this resilience that HEX has been showing in the bear market, or what many would consider to be a bear market. So let's actually start with the obvious, which is BTC. And one strong thesis for deciding whether we are in a bear market or not is a death cross. And it's pretty simple, actually. Get rid of this and this. And that's this crossover here that happened about 5 days ago. And the fact that we are beneath not only this green curve, which is the 200-day moving average, but if you zoom out to the weekly, you see that we're also beneath our 20-week moving average, our 21-week EMA. And let's actually go ahead and show you with the 20-week MA, because these are pretty much the same curve, more or less, but we're beneath both. So we're beneath those. We had our death cross beneath the 200-day. I mean, things are looking pretty bearish, man. Like, I don't know what else to say, but you see these lines I have here, and I've talked about why I have them set here. It's pretty simple. I'll review it, and that is, I don't want to go too much in depth into this, but some of you might be asking, well, this was the top of the wick back in December 2017, and the top of the same candle, which was the top of the wick in 2019. So I think these are two significant levels, around 14K and around 20K or so. And you see the 50-month actually approaching it, which has been historical support. So that's a quick little thesis for you there. And the 50-month is pretty much the 200-week for those of you who didn't know. And let's talk about this resilience that HEX has been showing versus pairs like BTC. Well, BTC is down 55.69% in the last 70 days. We had our local top at around on April 12th of this year. So about 70 days, over 50%, and all of those bearish things I mentioned. Now let's look at the obvious contender, which is our number 2 crypto, Ethereum, the substrate of which a lot of crypto is built on. Well, currently we are down about 54%. So what was Bitcoin at? Yeah, I went to the bottom of the wick. I shouldn't have done that, but down right now from all-time high, 46.3% on BTC. On Ether, you have 54.73%. On BNB, why am I using these coins? Well, these are the top. I'm looking at the top 6 coins here, right? And Tether obviously doesn't count. So we looked at Bitcoin, we looked at Ether. Now we're going to look at BNB and ADA, just to give you an idea of leveling the playing field. What category of coins are we looking at? Top 6, all right? And 55% down on BNB. And let's look at this last one. I'm so tired of looking at these charts. I'm already tired of, I don't usually look at these charts of these coins. Down 44%. Ew. I mean, just, I don't like this. Like, if I put money in crypto, it's because I want to make money, right? None of this is financial advice. Your generic disclaimer for this video. 44% down on ADA, 55%, 54%, 46%. And if we take a look at HEX, 21%. Like, what in the world? If you don't see the writing on the wall by now, I mean. And real quick, this brings up a topic that I've been meaning to bring up for a while now. It's Taylor Kennedy's article, which he wrote, and I've been meaning to shout it out here on the channel. I'm not sure if I have yet or not, but nonetheless, I don't think I have. So it's called Beating Bears, Baffling Bulls. The best performing asset of 2020 and 2021 continues richly rewarding investors in all market conditions. Now, that's a mouthful. That's a title. This is a badass graphic. Shout out Taylor Kennedy. I think he's at 250 Smurf on Twitter, if I'm not mistaken. And it's pretty much a great piece with, a great report, really. A great piece, great report, great article on some great background, some fundamentals on his case, and just metrics, man, like showing the overperformance of HEX. A lot of charts here, even some unique charts that I actually hadn't seen um, before visiting this, such as this correlation to crypto market. So really cool stuff. He actually shared our look into HEX ROI from launch graphs for HEX versus ETH, HEX versus BTC, and just an amazing piece, right? Just an amazing piece. So shout out to him, and I wanted to include that here. I'll probably leave a link to that in the description below so you can check that out. So back to the matter at hand, we saw that HEX has performed amazingly so far. It's down from all-time highs like 7 days ago. So we were at all-time highs a week ago on HEX, whereas on BTC it's been 70 days, on Ether it's been 43 days, BNB 52 days, and ADA 39 days. So it seems to be that HEX has been outperforming literally everything. So now that we've looked at that, let's go ahead and cover a little bit of the TA, just to give you guys a quick update on what's been going on. So we saw another nice wick down to these levels, and remember that the absolute most simple piece of TA, in my opinion, would be support and resistance, right? It's super simple. It's you have levels of significance. If they become significant across multiple data points, so for example, this level of about 6.4 cents, where we formed our ascending triangle and we're coming down to hold it as support, I think that's very, very bullish, especially with these long wicks and the fact that the bodies are holding the 20-day MA, 21-day EMA so far, right? If it breaks, then that's a different story. Then we might see a little more downside. I don't think too much more. For example, let's just take a look at recent data. When we broke over here, let's say once we broke beneath both over here, right, we were near the bottom. So I guess if you take the top of the candle to the actual bottom, it was just another 23% to go once it broke. And if we look over here, this was a similar region where something like that happened, and the actual bottom was almost 30% away. And let's take a look at a few more. This is when the body of our candle breaks the 21-day EMA and 20-day MA. Okay, so I think that's fair because this was the big payday event, and that's sort of different supply dynamics, and this is kind of new year, new data, new inflation rate. I think it's the most fair, and it's the most recent. So once we broke this ribbon, we had further downside of 35%, 30%, and 23%. So if we were to hold a pattern like this, maybe 20% to 30% dip if, and I'm saying if, it's a strong if, candles were to break this ribbon, because we've been holding strong support every single time here on it, which again, I think is really bullish, especially with these long wicks. But I'm just preparing you guys that if it were to break, let's say here, a 20% dip from there would be around the 6 penny region. 30% would be about 5.3 pennies. So not out of the cards. 5-6 pennies. I think that would be very, very strong support, to be honest with you. Excuse the barking in the background. They're just excited about support resistance levels. But yeah, I think that would be our highest downside. If we cover Fibonacci regression, or Fibonacci retracement, excuse me, and we saw previously that we'd seen retracements down to the 38.2% Fibonacci level, which would again correspond to about 5.8 cents. So I think that's the downside risk here. And don't take this as FUD, right? Like, there's always downside risk. It's just not always talked about. And I'm thinking here that the downside risk would be about 5 to 6 pennies. But yeah, don't take this as bearish. Like, I think the bottom could already be in. The bottom could already be in. These wicks, 6.4 penny resistance, it could have just been like a touch and boom, let's fucking go. But we've seen things play out a little slower in the past, and they've played out nicely, right? Like, the longer it's taken for certain moves to play out, kind of like the higher they can go. And HEX has treated investors very nicely over the past 2 years, right? It's up over 1,000x. So it's not a bad thing for consolidation to happen. it's generally a good thing. It creates healthy market structure. And again, this could be the bottom. I actually don't know. Believe it or not, I actually don't know. I don't have a crystal ball. But I use mathematics. I use historical precedent to help me decide what I think is more likely to happen, because it's all probability statistics at the end of the day. So yeah, take everything I say with a grain of salt, and don't take this as bearish. I'm actually extremely bullish right now on HEX. I haven't sold any at all. I've never sold a single HEX, by the way. Fun fact. Okay. 38.2% Fibonacci level is 5.8 cents. Our retracement, if it were to mimic something like this, could be around, 20-30%, would be 6.1 pennies, 5.4 pennies, which 5.8 pennies is right in the middle of that. So 5-6 pennies is our maximum downside risk, in my opinion, okay? Now, upside potential is huge. Like if you saw yesterday's fractal video, you saw that I was calling for potentially, if the fractal plays out that we've been looking at, anywhere from 20 to, 20 to 70 cents. Just, it depends on how high into the regression rainbow it goes. We don't know if it's going to hit cyan, purple, pink, just break the rainbow, right? Or we just don't know. Or if it's going to take a long time for it to reach those levels, which would correspond to higher levels. Like, we just don't know. So, again, upside potential, in my opinion, is very, very high. Can we see 20 cents easily? I think it would correspond to that doubling our technical bull flag target, which we've been talking about. Did I say we'd go straight there? No, I said, and I'm still holding by that target. I do think we can hit that 12 to 24 cent region, right? Like, I do think the upside potential is there for those levels and higher. Can we hit $1 next month? I think it's more unlikely, right? It's like the likelihood is lower, but it's still there, and it's non-negligible. I do think it's non-negligible because the liquidity in this market is just like 25 million or so on DEXs. If you include centralized exchanges, maybe 30 million. I think most of it is on DEXs. So 25, 30 million. It doesn't take too much to move these markets as compared to those with billions in liquidity. So that's my take on things. I'm generally still bullish, but I like to point out what the downside risk might be. Not so that you try to get out now and buy lower, because if you think about it, it's not really that much of a, right? Sure, you might stack up, 10%, 20% more coins if you're lucky, but I think missing out on a potential 2, 3, 4, 5 like crazy X's it's just not worth it, right? So when I say these downside targets, it's mainly for those who maybe bought over here and are saying, hey, like I'm underwater, what's gonna happen, to kind of bring those people some peace of mind, as well as those who might want to scoop up a dip. Again, I recommend, just if you're not in at least a little bit already, to just start throwing money at it literally whenever, and not worry so much about DCAing in. But if you already have quite the position, then maybe start trying to not time the market. I hate saying that because I don't like advocating trading, but I would say if you're not exposed to crypto at all, just getting some skin in the game at any point is probably a good idea. Again, given you have a long-term investment horizon. Not financial advice. I'm not a financial advisor, but I think my opinion as entertainment, right, if it's categorized as so, might bring you value. So I've rambled on enough. I think HEX has shown very strong resilience in this bear market, which I do consider us to be in a crypto bear market. I mean, just look at these prices, right? Down 44%, 55%, 54%, 46%, whereas HEX is only down approximately from all-time highs currently, like 21%. So that's that. Check out the website, lookintohex.com, if you haven't already. It's our custom indicators for you for free. Just check it out. We have a bunch of them, constantly updating, optimizing the site, so check that out. Again, let's get to this video to 400 likes. Can you guys do that? The most likes we have on a video is our realistic price predictions for the peak. Has 397 likes, almost at 4K views. You guys are absolutely insane. So thank you so much for the support. Let's get to 400 likes. Let's get to 3,000 subs by July. Let's spread the word. Let's spread the word. I'll leave the link to everything in the description below, including Twitter and all of that good stuff. So thanks again for watching. I appreciate you. Subscribe by now, most definitely. Like, you watched 16 minutes of me rambling at you. Definitely subscribe. And I'll catch you in the next video. Peace.